Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 strong buy dividend kings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope everybody had a very Merry Christmas. Today we're taking a look at dividend kings. These are companies that have the impressive track record of paying and increasing their dividend for 50 consecutive years. So today we're going to take a look at these companies, what it is that they do, those dividend details, and of course what Wall Street analysts are predicting for the stock's future. Just before we get into that, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Don't forget to download the TipRanks mobile app to stay up to date with all the latest stock news and access your favorite investment tools on the go. Links are in the description down below. Now let's jump right into these 3 strong buy dividend kings. First up, we're looking at S&P Global. They trade under the ticker SPGI, currently priced at about $492. In the past year, the stock has gained about 14%, and over the last 6 months is up over 10%. S&P Global is an American capital market company. They are a leading provider of financial market intelligence, data, and analytics. Their different segments include their S&P Global Ratings, their Global Market Intelligence, their Dow Jones Indices, Global Platts, Global Mobility, and their Engineering Solutions. Their services are crucial for financial markets, providing data, insights, and benchmarks that help investors, companies, and governments make informed decisions. The company just made it into the group of dividend kings, having recently increased their dividend for 50 years in a row. Their current quarterly dividend comes in at 91 cents per share for a dividend yield of 0.69%. And while that might not be the highest yield, the company does have an impressive dividend growth rate with a 10-year compound annual growth rate of nearly 12%. Their third quarter earnings report came out on October 24th, and the company saw both an earnings and revenue beat. Their Q3 earnings per share of $3.89 beat analyst expectations by 25 cents per share. Revenue climbed 16% year-over-year to a new record of $3.575 billion, beating expectations by $135 million. The company also raised their full-year 2024 guidance. A 4-star analyst from Citi just recently initiated coverage on the stock with a buy, saying that the firm sees continued market strength driven by the easing Federal Reserve and near all-time tight spreads, as well as an expected $4.9 trillion refunding wall over the next 4 years. They expect continued momentum for S&P with commodities, ratings, and indices given conducive market conditions. S&P Global comes in as a strong buy with 15 current analyst ratings, breaking down to 14 buys and just 1 hold. And the average price target of $587 implies an upside potential of 19.5%. Looking at those ratings down below, our high-end price target is $620 for an upside of 26%, while our low-end price target is $560 for an upside of nearly 14%. Number 2 on our list is Becton Dickinson. They trade under the ticker BDX, currently priced at about $227 per share. They're actually trading pretty close to their 52-week low. The stock has fallen about 5% in the past year, down a couple percent over the last few months. Becton Dickinson is one of the largest global medical technology companies. They develop, manufacture, and sell medical devices and instruments, including syringes and pen needles, intravenous catheters, infusion pumps and disposables, automated medication dispensing, and respiratory ventilation and diagnostic equipment. They operate medical device manufacturing facilities worldwide and have a presence in almost every country. This dividend king has been increasing and paying their dividend for 52 consecutive years. And their current quarterly dividend comes in at about $1.04 per share for a dividend yield of 1.7%. Their dividend growth rate over the last 10 years comes in at about 6%. They shared their 4th quarter and full-year earnings results back on November 7th, coming out with both an earnings and revenue beat. Q4 earnings per share of $3.81 beat estimates by 4 cents per share, while their revenue of $5.4 billion increased about $7 billion and beat by over $57 million. Their fiscal 2024 revenue of $20.2 billion grew about 4% year-over-year. An analyst from Bank of America Securities recently reiterated their buy rating. They said the sum of the parts valuation of Becton Dickinson is significantly higher by about 15 to 30% than current market prices. This discrepancy is highlighted by the fact that similar publicly traded peers in the life sciences segment are trading at much higher multiples. The potential recognition of this value could lead to substantial value creation for the company. The stock is rated a strong buy based on 11 current analyst ratings with 9 buys and 2 holds. And the average price target of $274 would imply an upside potential of over 20%. Looking at those price targets down below, on the low end we do have a hold rating at $245 for an upside of 7.6%, while our high end price target comes in at $290 for an upside of over 27%. If you've made it to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Our third dividend king is Abbott Laboratories. They trade under the ticker ABT, currently priced at $114 per share. The stock is up about 7% overall in the past year, cooling off a bit recently, down 0.04% in the last 3 months. Abbott Laboratories is a global healthcare company that is focused on manufacturing and selling a wide range of products and services. They sell medical devices, diagnostics, nutritional products, and branded generic medicines. Their medical devices include glucose monitoring systems and dissolving stents for the heart. Nutritional products has a variety of dietary considerations, including gluten-free, halal, kosher, non-GMO, and plant-based protein. And their diagnostic tools include molecular diagnostic systems that help analyze DNA and RNA. Abbott has also been paying and increasing their dividend for 52 consecutive years. And their current quarterly dividend comes in at about 59 cents per share for a dividend yield of 1.96%. Over the last 10 years, their dividend has grown at about 9.6%. They shared their latest earnings report back on October 16th, coming out with an earnings and revenue beat and raising the midpoint of their full-year earnings per share guidance. Q3 earnings per share came in at $1.21, beating estimates by 1 cent per share, while revenue came in at $10.64 billion, beating by $84 million. The company did report sales growth of 4.9% and said that they continued to strengthen their portfolio with a steady cadence of new product approvals. Following that third quarter report, an analyst from Argus Research increased their price target, saying that the company's growth drivers, including the Freestyle Libre, electrophysiology products, leadless pacemakers, and cardiovascular devices, as well as the ability to develop and launch new products, will lead to continued growth in sales and earnings. Abbott Laboratories has 20 current analyst ratings, coming in as a strong buy with 17 buys and 3 holds. And the average price target of $133 implies an upside potential of 17%. Looking at those ratings down below, on the low end we do have a hold here at 117 for a slight upside of 2.4%, while our high end price target comes in at $149 for an upside of over 30%. So that is a quick look at 3 dividend kings that all come in with a strong buy consensus from Wall Street. Let me know your thoughts on these companies in the comments down below. I always love to hear from you guys. And as always, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what Wall Street analysts are looking at. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.